Hello there, Hector Davil here. Welcome to a new video. Today we're going to be covering news announcements, or, well, more specifically, how to deal with news announcements whenever we are searching for our London Open breakouts. All right. We're going to be focusing mostly on early morning news, especially those coming from either Europe or England, since, well, at the end of the day, you know that whenever we are trading this strategy, we focus mostly on euro and sterling pound crosses. Okay, so obviously the news items that we want to pay special attention are those coming from either Europe or England. Okay, in case you don't know, well, these news announcements from either of these two economies, they come out early in the morning. All right, and when I mean early in the morning, I mean early in the morning European time, obviously. All right, 10 a.m., 9 a.m. Euro time, which is again around 4 a.m. Eastern Standard Time. So those are the news announcements we're going to be focusing on because, well, as you probably know, news announcements can easily spike price in any given direction for over 50 pips. Okay, news announcements, depending on how important they are, or, well, actually depending on how shocking the outcome of those news announcements actually is, well, they can easily spike price for 50 pips, even more. All right, even more. And obviously, that's something you really want to take into consideration whenever you are searching for intraday trades, okay? Because one spike is just enough to easily knock your stop loss within the minute, okay? So obviously that's something you want to be paying close attention to, okay? All right, let's get going. All right, well, the first thing you need to do whenever you sit at your trading station is, before actually looking at any chart whatsoever, is to pull the economical calendar for the day. You want to take a quick look at the economical calendar just to see what news announcements are scheduled for the day. My personal choice is the one at forexfactory.com. All right, forexfactory.com. Then simply go into the calendar tab up there. All right, and you'll be able to see all the different news announcements scheduled for the rest of the week. Simply, well, go to or browse to whatever date, okay, to the current day, and take a look at the news announcements scheduled for today. By the way, the time settings is fully adjustable. Simply click up here, right, up there at the clock icon, okay, at the clock icon there, and you will be able to set the time settings to whichever time zone of your choice. As I was mentioning before, you want to take a quick note of the news announcements coming from either England or Europe. All right, especially early in the morning. This is Eastern Standard Time. As you can see, we have a news announcement few news announcements coming from England at 4:30 a.m. Eastern Standard Time. So that's 1 hour and 30 minutes upon having the right after the London market opens. And then at 5 a.m. we have a news announcement coming from Europe. My advice: just only pay attention to the news announcements marked in red. Okay, those marked in orange or yellow are not really that important. Okay, quite frankly, they are not really that important. So you may scratch them all together. I personally only look at those marked in red. Okay, so what I would do is, assuming this was the current date, okay, Tuesday, well, I would simply take a quick note on my notepad, just notifying that I know that at 4:30 a.m. Eastern Standard Time we have a major news announcements for the sterling pound. That means that's going to affect any potential setup on a sterling pound crosses, okay, sterling pound against the American dollar, sterling pound against the Canadian dollar, etc., etc. And therefore, I want to be very careful if I am to trade the sterling pound that precise moment. Okay, that's that precise morning. And also, same thing with the euro, right? Any any trading opportunity I may find today on the euro against any other currency, actually any euro cross, may be affected at 5 a.m. by these news announcements. Out of the two, the ones coming from England usually have a larger impact on the charts than those coming from Europe. How is that? Well, because the trading volume on the euro crosses is simply larger than the trading volume on the sterling pound crosses. All right, that means that it's more difficult to move a euro cross than it is to move a sterling pound cross. Just because there is more trading volume going on an ongoing basis on the euro crosses. All right, so the euro news announcements don't affect euro crosses as much as sterling pound news announcements affect sterling pound crosses. All right, so out of the two, I would be more, I would certainly want to be more cautious this precise day to trade sterling pound crosses than euro crosses. Okay, just because at more or less at the same time, 4:30, 5 a.m. Eastern Standard Time, I may see wider spikes or more chaotic, more volatile price action on sterling pound crosses than on a euro crosses, precisely because of what I was mentioning before. All right. Let me go back to the slide presentation. Whenever you sit at your trading station and you see that there is a news announcement early in the morning, again between 3 and 5 a.m. In the morning, you want to set a blockout period. Okay, I personally use a 2-hour blockout period. That means that if I find any trading opportunity within 2 hours from any news announcement, I shall not take that trading signal. I shall not take that trade. Well, precisely because I don't want to enter a trade just to see, before I have the time to actually, or before I give time enough for the trade to either hit my stop loss or to hit my profit taken level, well, I don't want that price spike delivered by the news announcement to, basically spike price in any direction and potentially knocking my stop loss out. Okay, there is something that we all need to keep in mind. News announcements are unpredictable, or actually the outcome of the news announcements are totally unpredictable. No one knows how any news announcement is going to affect a forex chart. Okay, so the last thing you want to do is to enter a trade right before any news announcement is scheduled, okay, right before a news item is about to be released, because quite frankly it's a 50-50 chance. You don't know whether the news announcement, first of all, is going to affect price at all. Sometimes it doesn't have any impact whatsoever, but occasionally it does, and if it does, you never know whether it's going to drive price or spike price to the upside or to the downside. So quite frankly, it's just gambling. If you enter a trade just before a news announcement hits the wires, you are gambling. And we don't trade to gamble our money away. Okay, we don't do that. If you want to gamble your money away, hey, I recommend you to just play blackjack or something. It's way more fun. And certainly trading shouldn't be gambling. All right, shouldn't be treated as gambling. So you don't want to take a trade right before the news announcements. That's why I personally set a blockout period of 2 hours. Any trading signal given by my system, in this case the London Open breakout system, 2 hours before the news announcement is scheduled, I would not take that trade. Okay, so if we go back into the economical calendar, as per the 2-hour blockout rule, you do not want to take any trade on any sterling pound cross beyond or after 2:30 Eastern Standard Time, okay? Because we have a news announcement at 4:30, all right? So that's where the 2-hour period, the 2-hour blockout period comes in play. Also, we don't want to take any trade on any euro cross after 3 a.m. Eastern Standard Time. Okay, all these, I have my calendar set at Eastern Standard Time. All right. So what am I getting down to? If we cannot take any trade on any sterling pound from 2:30 a.m. onward, and we cannot take any trade on any euro cross from 3 a.m. onward, that means that, well, basically, I am not going to be able to take any trade early in the morning on this precise day. Okay, either sterling pound crosses, opportunities on sterling pound crosses or euro crosses. So what am I getting down to? I'm getting down to the fact that Tuesday, January the 19th is not a good day to trade the London Open breakout. It's not a good day to trade this Forex strategy. Because there's just the market that precise day is totally filled with news announcements, and that will probably cause the sterling pound and the euro charts to be chaotic. All right, we are going to see chaotic moves. We are not going to be able to rely on our technical analysis as much as we usually do, or as much as we like to do, because price is going to be, quite frankly, most likely it's going to be affected by these many news announcements. All right, so the best trading decision you can take on this precise day, this precise Tuesday, is to not trade at all. Sometimes, the best trading decision a trader may take is to not trade at all. Okay, is to remain out of the market for the time being, and this is one of those days. All right. Just too many news. Please mind that the London Open breakouts strategy is entirely based around the first couple of hours up on the European markets open up, and well, if we have too many interruptions, right? At the end of the day, news announcements are indeed interruptions on our standard trading procedure. Well, if we have that many interruptions, quite frankly, it's just best to not trade at all. All right. So 2-hour blockout period. Identify whether there is any news announcements scheduled for the day from either England or Europe. Set a 2-hour time span, a blockout period 2 hours before the news announcement releasing time, and avoid trading within that 2-hour time period. Okay. Now, obviously, as soon as the news announcements are out of the way, at let's say 4:35 a.m. all right, for the euro crosses, for the sterling pound crosses, or 5:05 a.m. for the euro crosses, well, you are okay to begin searching for trades once again. All right. Once the news is out of the way, if you don't quite see an immediate impact on your charts, well, that means that the news announcement didn't quite have that much, that didn't create that much momentum, that much volatility into the charts, and therefore you are okay to continue searching for trading opportunities as usual. All right. All right, let's recap a little bit of what we've seen so far. You want to search out for early morning news announcements. Again, only major news announcements. That means those colored in red. Okay, do not mind those colored in orange or yellow as per the Forex Factory calendar. And obviously, you want to, put an extra wave on those coming from England. Those are going to have massive impact on sterling pound crosses. The news announcement coming from Europe also affect obviously the euro crosses, but not that much. All right, so those coming from England are the ones you really want to take a mental note of. All right. Then, set a 2-hour blockout period. Do not trade within 2 hours upon a news announcement is being released. At least for that currency pair, okay? Obviously, if there is a news announcement coming from England, you are okay. You are indeed okay to search for trade on euro crosses, okay? But you are not okay to search for trades on sterling pound crosses. Once the news are out of the way, if they haven't really spiked or messed the charts that much, well, just simply wait 5 minutes, after the news and begin searching for trading opportunities just as usual. All right. There is one exception though, and that's interest rate days. I don't take any trade on interest rates days, and I don't mean to say that I don't take trades before the interest rates are released. I mean that I don't take trades at all through the day, okay, for that particular currency pair. For example, if we have the interest rates coming from the Bank of England, I don't take any trade whatsoever on any sterling pound cross on that particular day. And the reason for that is because the interest rates are actually the single most influential element in the forex world, in the forex markets. Let me try to explain why. Imagine you are an American citizen, okay? You have your bank account, your savings account, obviously in an American bank account, nominated in dollars, but you have $100,000, for example, sitting around, and you want to diversify your risk, and you want to nominate that account, or you want to deposit those funds in a foreign bank nominated in a foreign currency. For example, in a sterling pound deposit located in, I don't know, London, all right, or any other bank in England. Well, obviously you're going to be following very closely the interest rates for the sterling pound, because it's going to directly determine the yield, the returns you're going to get on those deposits. All right. So on the day the Bank of England decides on their interest rates for the upcoming month, it's going to be a decision-taking day for you. If the interest rates, if the Bank of England cuts down on the interest rates, well, that's going to be affecting rather negatively to your deposits nominated in England, right? Nominated in a sterling pound, because you're going to get lower returns on your money. And that may mean, that may make you, decide altogether to close that account and to switch from a deposit in England to a deposit in, I don't know, Switzerland or Canada or Australia or, any other currency that may give you better yields, all right? So on the day that interest rates are released, especially if the interest rates change, all right, either we see interest rates going up or down, well, thousands upon thousands of traders around the world are going to be switching from their deposits, okay, their funds, from one currency to another, okay. That's not going to be based on the technical analysis. That's not going to be based on the charts. That's not going to be based on trends. That's exclusively going to be based on interest rates. And therefore, on days where the interest rates are being released, millions upon millions of dollars exchange from one currency to another, depending on the outcome of that interest rates decision by that particular central bank. All right. So, like I say, those days are particularly volatile. I've seen price moving over 200 pips within 5 minutes from the interest rates being released. Okay, and like I say, price action on those particular days are very chaotic, very unpredictable. And the worst thing of all is that, as I was mentioning before, the moves are not based on anything that may be going on the chart. Okay, it's exclusively based on the news announcement. So that's why I particularly avoid trading altogether on interest rates. All right. So if you see that you're trading a station, you pull out your economical calendar and you see the Bank of England or the Central Bank of Europe releasing their interest rates policies on that particular day. It usually happens once a month, okay, one particular day a month. Well, if you see that the interest rates are being released that day, my advice, close your trading station or search for trading opportunities on any other currency, okay? Don't trade, guys, on interest rates days. At least that particular currency pair, it's not worth it. Okay, there's just too much going on the forex markets that precise day. Us individual small traders are better off just sitting on the sidelines for the rest of the day. You need to realize that on occasion, the best trading decision a trader can take is to not trade at all. Okay, and that day is one of those days. All right, so that's why I'm saying your best course of action is to not trade that particular day at all. And finally, we are going to be also looking out for potential news announcements coming from America, okay? Either from United States or from Canada. As we've already established, the those early morning news announcements coming from Europe or England are released within the first hour, the first 2 hours of the London market, okay? Well, the American news announcements are usually scheduled around 8:30 Eastern Standard Time, okay, around the New York market opening time. So, if by the time the New York market opens, we are involved in any American dollar trade, such as, for example, the sterling pound against the American dollar or the euro against the American dollar, well, we want to take another quick look into our economical calendar just to verify whether there is any news announcement coming from America, or if we are involved in any Canadian dollar cross. Again, the sterling pounds against the Canadian dollar, or the euro against the Canadian dollar. Well, we want to take a quick look into our economical calendar to verify whether there is any news announcement coming from Canada. All right, that makes sense. It's just common sense. Why would we want to do that? Well, imagine we took a trade as the London market opened. It's been moving all morning long in our direction, and by the time the New York market is about to open, we are sitting at I don't know, let's say 40 pips, okay? Plus 40 pips in profit. Now we take a quick look into the economical calendar, and we notice that there is a news announcement coming from America, and let's assume the trade we were involved with was the sterling pound against the American dollar. All right, the cable, the GBP against the USD. Well, let's assume that, again, like I said, by the time the New York market opens, we are sitting at plus 40 pips in profit. And with a quick look into our economical calendar, we see that we have a news announcement, an important news announcement. Again, only those colored in red, only those ones labeled as major impact news announcements. Well, we have one specific news item coming out at that time. The question is, as a trader, the question you should be asking yourself is, do I want to risk these 40 pips in profit that I already have in my hand? Okay, do I want to risk giving them back to the market by keeping the trade open through the news announcement, and therefore having any potential price spike affecting the performance on that trade? Please remember that if you keep a trade open through a news announcement, it's a 50-50 chance. On occasion, price may spike in your direction, but also it may spike against your direction. You never know. It's a 50-50 chance. That's basically gambling. So do you really want to potentially risk giving those 40 pips back to the market? Well, if you're a sensible trader, okay, the answer here is no. The answer here is no. So there are two courses of action. Either if you are satisfied already with those 40 pips, you simply close the trade altogether at that point. You cash out those 40 pips, let's assume 5 minutes before the news announcement is being released, for example 8:25 a.m. Eastern Standard Time, and that's it. You are done for the day. You've made some good profits. Okay, 40 pips is not too bad for an intraday trade. That's it. You are done for the day. You've managed your risk quite sensibly, okay, quite conservatively, and you don't want to suffer. You don't want any stress. You don't want to sit through the news announcement, and you avoid the potential price spike altogether. Second course of action, if you are a little bit more aggressive, well, you may trail your stop loss, let's say to plus 20 pips. Okay? Plus 20 pips. So if price spikes to the upside, I mean, if the news drive price to the upside, hey, great. Those 40 pips are going to transform, are going to, convert into plus 60, plus 70, plus 80 pip, within the minutes, within 5 minutes, depending on how far the news announcements drive price. And alternatively, if price, spikes against your best interest, against your direction, well, you will be stopped out at plus 20 pips, which again might not be a major home run, okay, might not be a great trade, but not at any rate, at least you've managed to offset a portion of the risk. You've managed to cash out 20 pips out of that trade, and well, you've come on top, you've come out positive on that particular trade, and well, like I say, at least you survived the American news spike. All right, so again, two courses of action: simply close the trade altogether ahead of the news, 5 minutes before the news, or simply, again, 5 minutes before the news, simply trail your stop loss up a little bit closer to current market price, again, just before the American news hits the wires. All right. And that's about it, guys. That's about that's about it as far as dealing with the news announcements, both early morning and American-based news announcements. Now you know what you are to do if you are a sensible trader. Try to meddle as little as possible with news announcements. Those events are dangerous. Those events create massive volatility on your charts, and quite frankly, there are plenty of trading days throughout the month, okay? So try to avoid keeping trades open through important news announcements, okay? That's my recommendation. All right, folks, that's all for this video. Bye-bye.